Hey, this is Dr. Jeffrey Scott, and this is my Market MRI Pro update for February 3rd, 2026. You know, there's one thing I can say about the market we had on Tuesday, and I hate midday reversals. Those who've been to my education, listened to my videos, know that I work full time. So I can sneak a peek of my TD Ameritrade, now known as Schwab Thinkorswim account during the day, but boy, there's not much I can do about it. And I looked early in the day and I was up many tens of thousands. And then around 2:30, I turned negative, and then I got back half of it before the day ended. But man, what a day. I hate midday reversals. Was that a shot across the bow of the bulls telling you that it's over because of something worse, or was it just a one-day wonder? I'm going to put my money on it might be something worse. Again, my name is Dr. Jeffrey Scott, marketmripro at gmail.com, Google Group Top Down Trader, and www.marketmripro.com. As always, these videos are for educational purposes only. Anything I talk about should be taken in the spirit of education and not investment advice. I do the videos to demonstrate how I use my tools to do my analysis in 30 minutes or less per night. Trading involves risk. You and are solely responsible for any investment decisions you make. I may own or intend to buy any stock mentioned. Trading stocks and options should be considered risky, and I use the Market MRI Pro app during these because it's quick. But I have my tools are in multiple platforms and I can trade the same way regardless of which tool. My Google Groups are a great place to stay connected. It's the only mailing list I keep. Just sign into Google Groups, go to all groups, find the group you want to join, click join group. If you want to link or unlink your Google profile, choose an option. In the subscription section, choose how you want to be contacted, whether it's digest or each individual email, and go ahead and join. There are not a lot of individual emails that I don't send out. Um, we are in the midst of earnings season. The um, the president signed in a bill to, I guess, fix the short stoppage of the government this evening. That doesn't seem to have rallied the futures at all. We get ADP employment in the morning, so we'll see how the private sector is doing. And I wonder if we'll get back on track with jobless claims on Thursday and Friday. Now the government will be back to work, or will there be a short delay because the 2 days they were out, they missed it? I suspect we'll get the data. I can tell you right now at about 9 o'clock Eastern time zone, futures are trading mixed. Dow's up 16, Bitcoin's down 15, Nasdaq's down 33, S&P's flat, gold is up as usual 127 points, and the E-mini Russell's down about a half a point. This evening, the main stocks with earnings, AMD came out and is trading down. Let's see if I get to that. At least at when the early session closed, was down 8.4%. Chipotle was down 5.9. Mondelez was down 4.3. SLab up 32% on a potential takeover. Others, Enphase up 20.6. SIMO, SIMO, Simulations Plus, I think, up 16.3. SONO up 10.4 and MTCH up 7.4. Others of note, INTA down 20% and VRNS down 18%. So mixed earnings at best. Tomorrow, Wednesday morning, Uber and Lilly, Novo Nordisk, which was down a lot today, with a warning. And then in the afternoon, we'll have Google, ARM, Qualcomm, and others. And then on Thursday, we get Amazon and one of those Bitcoin turn energy producers, IREN, as well. So a lot of earnings to go. It is a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. For more information about anything I talk about, any questions, concerns, email me at marketmripro@gmail.com. And for Market MRI Pro customer support, any issues with the program, coding at marketmri MRIPro.com. All right, so what did we see today? Volatility was up 4.4%. Russell up 0.23 was a sole index above zero. Dollar was down 0.26. Diamonds were down 0.35. Spider down 0.85. Q's down 1.54. And Bitcoin was down 2.08. You could see at the highs of the session, all of the major ETFs were up, including Bitcoin. So we definitely sold off. New high, new lows on the NYSE didn't budge, still very strong. But you can see it's both a lot of highs and a lot of new lows, which starts to feel like Hindenburg Omen time. And you can see we're still negative on the Nasdaq. From the S&P 500 performance, energy led up 3%, 2% for materials, 1.6 on staples, and 1.45 on utilities. Kind of a defensive feel there. Tech was down 2.19, communications 1.61, healthcare down 1.02. If we look at the big winners, copper, silver, uranium, metals and mining, gold, solar, oil exploration, lithium, telecommunications, construction, number of things that were up. And the biggest losers, look at that, 6% for fintech, 5.6 cloud, 5.09 cyber, 4.6 on software. Here's another cybersecurity down 3.59, e-commerce 3.57, 3 1/3 on games, internet down 3.32, social media 3.23 down. So a lot of negativity today on the S&P 500 themes and sectors. Of interest, 56% of the S&P 1500 were up, only 40% of the Nasdaq, and 57% of the NYSE. So it was really a mixed day, and I think all in, more stocks were up than were down despite the negativity. If we go into the timing model, we can see on the daily, we lost the diamonds today, excuse me, the spiders today as they closed below the WMA. And remember, even though they just barely closed, to switch back to a buy, the bongo is going to have to heal as well. So I got three negatives, three bears, spider, Q's, and Russell. The only thing holding out is the diamonds. So from a very short term, I'm very concerned. However, if I look at intermediate on, for example, the weekly charts here, we could see that we are in a buy signal on all four. And the monthly, it's also a buy. I'm not going to show it. So we have a long and intermediate term says be long, but the short term says be short. So at best case scenario, this is a pullback in an uptrend. Worst case is we're evolving into a downtrend. And you can't tell the difference because we won't know the difference until we see which way this resolves. And if it resolves with the weeklies rolling over, that tells you something a lot more significant is happening. If we look at the U.S. index ETFs tonight, so S&P 500 just running up this trend line, bounces off it, bounced off the 50 today. Seasonality is okay, not great. Around the middle of the month, around the 17th, it starts to turn negative. Best case is we're consolidating here. Worst case is we're rolling over. As I titled the video a couple days ago, bottoming might be an event, but topping is a process. If I look at the Qs, I see a similar story running up the trend lines, closed right above the 50, actually touched the 100 today. And unlike the others, this one's a little bit longer off of their all-time highs. So still healthy, I guess, at the 50, just below the 50, but a little bit more worrisome. The Qs, the diamonds are riding up this wedge. Tagged both the top and the bottom today. Not a big change today, is down 0.35. And then the Russell was the one that was up, and it's running up this trend line. It pulled down to it and bounced, as you would expect. Probably looks the best of the bunch right now. If we look at the VIX, we can see VIX opened low, traded pretty high, and came back and closed right around the 200. I would say that VIX is concerning, and it's running right up with seasonality, which would project that the VIX goes up. And if the VIX continues to go up, that says bad things about what to expect, I think, about equity markets. And the dollar, which sold off hard, is working its way back up, but the key thing on the dollar is it's way off high, so not a big issue. One thing it does influence is commodities, and if we take a quick look at the commodities, gold actually bounced after 2 down days, up a lot because of the gap, up 6.36%, getting back above the 21E and 17 simple, and consolidating. If we look at silver, similar picture, closing at the bottom of their day, but again up 6.24%. That is too bizarre. Let me just 6.24, 6.36, so a little bit different. If we look at oil, oil pulled back some today as some of the heat with Iran seems to be dissipating, but still finished much higher than it opened. Natural gas is broken down. And then if we look at the 10-year and the 30-year, they both went up higher today and closed lower. This one was down just a bit at 0.16, and the 30-year was down 0.18. I'm looking for it to stay below the 5%, and we'll see what happens. If we look at our buckets, we'll see some deterioration with 13% of the NYSE below the Bollinger Bands, 15 of the SP 1500, 17 of the Nasdaq, and 12 of a Russell. Well, we're not in a bear market, we're not in a recession, and so typically we don't get a whole lot worse than this before we see the market rally. But it doesn't mean we can't get worse for a couple more days. It also doesn't mean we're not going into a bear. Only time will tell us. So I'll be watching this closely and looking for any other signs that we might be reversing. On the market breadth, this is where the concern comes in. Certainly on the Nasdaq, you can see we've come down on the stocks above the moving averages. Same on the NYSE. NYSE closed, not much different than their all-time highs. And it's hard for me to be, as they say in the land of oncology, hanging crepes, expecting the death of the patient when we're just at all-time highs. Doesn't mean we're not at that area of risk, and we probably are, but right now we're still trading just at all-time highs. The Nasdaq, very different. It broke down below the 50-day moving average. If we look at new high, new lows, AD lines, and up-down volume, all positive on the NYSE, and for whatever reason, we're not seeing it. I didn't get it today on the Nasdaq, but their new high, new lows turned negative. We might see another Hindenburg when the data updates further here. I saw it on the Q market breadth tool. So we've got confirmed Hindenburgs on both of these, and that predicts that we're going to pull back, not go to all-time highs. And when I've looked at what's the difference between a good Hindenburg and a bad Hindenburg, if we stay above the 50, it doesn't usually go to a bad Hindenburg. So this one's broken the 50. Another thing, I have to go back and re-review it, but sentiment.com is a site that I subscribe to, and their email today was about the Hindenburg on the Nasdaq. So it's the first time I've actually seen anybody but me talk about it. It sort of confirmed what we know, which is when you see a confirmed Hindenburg on the Nasdaq, and this was interesting, a year later, the majority of the time the small caps are down. So I think it's something we have to pay attention to, although right now it's a bigger issue, I think, on the Nasdaq. If we look at ratio charts, what's leading? Materials, energy, staples, industrials, utilities all look good. Let me pull this back. What did I do? Sometimes I have bad control over let's see if I can fix that. Switch. I move things around with my mouse. It's a habit I've had for a long time. So if we look here, let's go back to hourly. I don't think it's pulling all the way over. All right, well, we'll look at it on the non-ratio charts. I have to turn it on and off to fix it. I'm not willing to do that just right now. If we look at my larger market breadth tool, and let's just look at the 13-week new highs, 0.66, 0.67, 0.61, and 0.37. None of them say we're going to reverse tomorrow. So I think we could have another couple of days. If we get worse, it doesn't mean we're going to rebound right away. If we looked at the sector timing model non-ratio charts, and I blow up, we'll start with Bitcoin. Continues to break down. That looks like could be getting ready to reverse here with a bottoming tail. Let's wait and see what happens. I certainly wouldn't be buying it until I get some white candles. It's well below the moving average complex. Technology broken down. Discretionary really didn't do much today. In a sell just below the moving averages. Communications failed breakout, coming back to test the moving averages. Industrials look great with a fresh breakout. Financials trying, but in a sell below the averages. Energy looks great and was up today despite oil falling. Materials looks great. That's your leadership. Energy, industrials, materials. What doesn't look great here? Real estate. What else? We got utilities doing nothing. Staples also looks great. Defensive play. Really looks good. While healthcare has broken down, does not look good. And there's Bitcoin again. And then I also like to similarly look very quickly at some of the key stocks that many of us hold. And a couple have earnings coming up shortly. First one is going to be Amazon. Man, Amazon looked so good early in the day when it opened up here. Closed on the moving averages, flipped to a sell. Suspect earnings out Thursday. I own some, but I protected with some puts today. Apple, is it its time? Breaking above, new buy signal, looks okay. Google looks great, had a reversal today with everything else. Earnings out tomorrow. Obviously, they're important. Meta continues to pull back after the big gap and run on earnings. I'd like to see a white candle before I got back in. Netflix, well, you kind of get white candles every once in a while, but it's in a downflow and is broken below 80. No buy. Tesla, I think the market's got to decide so many things. Does it like getting rid of the S and the X? It was amazing how few cars they sold, and concentrating now on robots and next models. What about this XI and the I think it's XI, AXI, XI, their AI company, and SpaceX merging doesn't impact Tesla, except people thought SpaceX might merge here. Looks like they can't figure it out. The stock's trailing down a bit. Nvidia had a tough day today. I still think for the most part it's waiting to see earnings. Microsoft dead. Biotech tease day. Long-legged doji today. Indecision. We'll see what happens tomorrow. Pharma also was negative today, but staying in a buy mode above the moving averages, so not broken. Data centers in a short multi-day pullback. I like this bottoming tail. I'm still bullish on it. And defense teasing us with a reversal right on the moving averages. We'll see. I think that takes us back to Amazon, so we're done. Now let's jump into the JAS layout. And I'm tired, so let's just go to my favorite two scans and then the scan from over the weekend if we don't see anything. All right, we're going to go very quickly. ALK, Alaska Airline, breaking out and running. Earnings not to April. Oil coming down is good for the airlines. It had a massive surprise about 10 days ago. Does not pay a dividend. All right. EMN, Eastman Chemical rather, a nice breakout here. Earnings came out the 29th. It looks pretty good. FHN, I like it better because it's above the moving averages with the breakout. It had volume, breakout, momentum, a double momentum signal, good relative strength in OBV. It's going to have 48 cents versus 42. That's not much growth, but they're not looking for it. Pays a 2.5% dividend. That one looks interesting. FIBK, these are regional banks. FNB, Huntsman is chemicals. That's one that should do well in this environment. Looks good. Ingersoll Rand, Trucker JB Hunt. Let's see, $1.46 versus $1.17. So that's over a 20% growth. Little dividend. Earnings are not out till April 21st. This is kind of a nice looking chart with a breakout. JetBlue, another airline. I probably like Alaska better. LPLA, money management, EPCO Security, Cure, Biotech, Relay Therapeutics. I like this one breaking out above the trend line. That one looks interesting. RY, Royal Bank of Canada. Nice breakout from a flag. TD Bank, TERN. Well, I love the technical picture. I have no idea what this company makes, when it will have earnings, etc. But you clearly broke out of that and broke out of the 50 today with double momentum, TERN. That looks really interesting. Terex, nice breakout here. TFI International, don't know what they do. Nice breakout. Trevi Therapeutics kind of look a lot like the last one at a lower dollar value, but breaking out from a flag. I just wish it was above the 50. ULCC, Frontier Group. Woodward Inc., big gap up. Was it on earnings today? Let's see. 2.2, 60% growth on a multiple of 48 with a 31% change. That might be one to watch. And KWin, yeah. And then Zion, another regional bank. We talked over the weekend about Huntington and Fifth Third. Let's see what FITB looks like here. And you could see they've had a nice run up here as well. The other list I look at, we'll just see if there's anything on it that looks interesting. So for a bad day in the market, there's a lot of things that are showing up on my scans. And I did want to show you something here. What did I want to show you? Can't remember. HUT is one of those other Bitcoin players turned miner. Let's pull back though. So I think, let's just see what KRE looks like. KRE looks great. So, and this is when we first spied it back here when it really looked great. I'm going to stick with the double momentum signal stocks tonight. I am a little surprised with the market down as bad as it was, how many things are showing up here that look interesting. So I think between one of the regional banks, perhaps First Horizon, pays a 2.5% dividend, earnings are out. Perhaps an airline, of which of the ones here I liked Alaska better, breaking out. And then maybe from a healthcare perspective, TERN. And the last thing I want to give you is I talk about these every time I worry about the market. Here is McKesson. Where is the no breakdown today? And up 0.55% in a bad day in the market. And the thing about McKesson and Cencora up and Cardinal Health, if this market gets troubled and you still want some growth, look at those three. They have a history of being immune to economic issues and hold up. And probably the only thing that will break them is if federal drug reform really chops the price of drugs. Take care, everybody, and we'll see you tomorrow. And by the way, that was 24 minutes of top-down analysis looking at a bunch of stock charts. It can be done in 30 minutes or less.